Hey all, welcome to ShareTreck. This is Raj here. Friends, I've been drooling over this market. I thought I'll start today with a different screen instead of our regular CNBC because I think even before the day of liberation, April 2, which most of us fear about, I think we're going to have a lot of potentially negative catalysts. I don't see how the job openings is going to come out better than expected. And I don't see how non-farm payrolls and unemployment rate can be better. Remember, a lot of Mexicans have been rounded up and sent off. So that factor is there. And then going forward, all the DOGE sacking of federal employees and the domino effect on the private sector, all of that is going to come in. So I'm looking for some kind of nasty surprise out here, but we have been prepared for this. I've been selling out my profitable Mag 7s. I have the cash handy, so I'm all ready to go. And this is the time when I think for the first time as a retail investor, I'm in a situation where I'm cheering the downturn in the market with the idea that, yes, I'm going to be able to buy really good value companies at a very low price. And if you look at the valuations, they are starting to get much more sensible. I'm very interested in Google. 9.41 is the PE for Google. And Google PE is very attractive to me because I see them actually deploying their AI. I have seen ads of Google phones and Android with Gemini talking back and explaining how to do things. So it seems a very practical application. So I'm really excited about getting Google at this kind of valuation. I don't think this is going to last long. When this downturn is over, Google is going to go back up again. And it will also be into physical AI. So I'm a great fan of Google, really thrilled about it. Yes. And I'm looking at the other big one, which is Meta. Meta has got a lot of things going for it. Of course, for the time being, there may be a little bit of liberal political backslash for their moderation rules and other things. But their AI is pretty good. And they have a lot of assets. 24.15 seems pretty decent for getting into Meta. And then, of course, you've got Microsoft at $30.50. Remember, Microsoft has come all the way from the green screen days with MS-DOS to right now with GUI and AI and Copilot. They have managed to transition, and remember, they have a big real estate which they have commercialized. Like Google, for example, has got the Google Sheets and Google Word and all those kind of things, the equivalent of Office, which is absolutely free. But Microsoft actually gets money for it every year. It's a subscriber model, and they have added Copilot to it, and they're adding AI to all of their Office packages. So definitely Microsoft is going to soar back again, and they have a bit of catching up to do to put their fingerprints on AI, physical AI. But the way I'm looking at it is that earlier we had a lot of division. We had social media companies like Meta, and we had Microsoft, which was more of office automation, Apple, which was more of consumer electronics and consumer AI and stuff like that. I mean, not even AI, consumer goods like phones and music systems and so on and so forth. But now that distinction is getting extinguished because AI is everything for everybody, and it's kind of merging them all together. So if you look at the best of breeds fighting with each other, I would say that I'm looking at more of Meta, Google, and Microsoft than Apple, because the others have got a great pedigree in software, and they are in a position to take advantage of this because they are in the corporate sector as well. NVIDIA is again another favorite. I think 37.3 is a bit rich compared to the others, but I would be happy to start dollar cost averaging, and I'm already attempting, but I'm not getting at the price that I wanted. But maybe today I'll be successful. That said, let's go on to our regular haunts. All the indices futures are looking negative, and for a good retail investor, there's an opportunity to start dollar cost averaging. We don't put all the money in at once, but we start nibbling into those really good stocks. I have shown you my list of stocks. You may have others. And of course, I'm also looking at Berkshire Hathaway, which I didn't mention out there. It's a conglomerate. Berkshire holds value better than anybody else. And now with the advancing age of Warren Buffett, there could be a little bit of doubt about their ability to perform the same way in future. But if they are process oriented and they have inculcated the process within the organization, the value should be retained. They are sitting on a lot of cash, and they're doing exactly what I'm doing right now, which is having the cash and dollar cost averaging. So they may see a really good buy that they can execute at this time, and that will add to the value. So I'm dollar cost averaging on Berkshire Hathaway as well. So that said, a lot of headlines out here to worry about. The first one is Goldman Sachs sees Trump tariffs, spiking inflation, stunting growth, and rising recession risks. So yeah, I've just dispensed off with my dashboard for today. I wanted to just show these negative headlines that are coming in, which are going to psychologically impact all the traders who are out there, all the retail investors who are out there, and there's a lot of negative here than positive. So this was the first one out there. Then oil climbs as Trump warns of tariffs on Russian oil buyers and bombing of Iran. And Trump also warned people who do the same with Venezuela. So it seems like it's like a soup Nazi from Seinfeld. If you have seen that sitcom, he says no soup for you if he's not happy with somebody. But for the soup Nazi, there were people lining up outside trying to buy the soup. So if he can blacklist a few people, it didn't matter. But if you look at the global economy and the places from where you can buy oil, if you keep on doing these kind of things, all the other countries are not going to sit tight because oil becomes more expensive when you limit the sources from where you can buy them. At some point, the cost benefit ratio changes. And most of the countries will just decide to ignore what Trump is saying. And then implementing these kind of tariffs is a logistical nightmare. So you can shout all that you want, but at the end of the day, money talks. And I think that at the end of the day, it's going to be people who are looking at their pocketbooks and saying, you know what, this guy is crazy. We're just going to buy oil from where we are getting it cheap. And that's what India did in the last time round. They bought crude from Russia, refined it, and they sent it off to Europe. And they created a whole industry of refining out there. So things can change. We have to be careful out there. Just wanted to show you these headlines. And then there's another headline which says, analysis, shrinking US risk premium to divert more cash into Europe. And I'm thinking it's not only going to be Europe, but it's also going to be China, it's going to be India, it's going to be other places like UK and Australia, which are not in part of the EU. But they have a pretty decent sector, like mining sector would be there in the Australian area. And in UK also, it used to be the financial market earlier before all these gold shenanigans happened. But it's still a force to reckon with. So all of these stock markets are waiting to take the money. So we'll see money move out there. And it's already being witnessed as per this headlines. And then global shares slump and gold hits a record high as investors fret over tariffs. So the theme today is that forget the tariffs, April 2. We'll already see that happening before we reach April 2 because job data will not be that good, in my opinion. With that said, I think I'd like to go to the futures. And we are looking at S&P 500 futures. Yesterday, I made an excited video just before going to bed where I spoke about what was happening in NASDAQ futures and S&P 500 futures. And the situation that was present at that time has worsened right now because we are down 1.13% in the S&P 500 futures. We are well below this diagonal line of support from before, which has now become a diagonal line of resistance. I'm going to pull it down a little bit because I want to create this wedge out here. And this wedge is on a bear channel. So by default, these kind of wedges will break down, but we have a lot of other indicators which are pushing us down. If you recollect, I had said that this is the flagpole and this is the bear flag, and we have broken out of the bear flag. So we have a potential of going all the way down to somewhere around 5,150 or 5,155 in that range. We have already triggered that and we are on our way there. And a brief stop is going to happen somewhere around, I would say, 5,515. We would see an attempt to arrest this fall, but I'm thinking that it's going to go down. The biggest test is going to start in the area between 5,479 and 5,373. So that is the area in which there's a lot of buying support. And if that support materializes and people are not spooked off, then I think we'll have a potential to turn back around. Otherwise, the bear flag can manifest and we can go all the way down to 5157 or something in that vicinity. Looking at NASDAQ has the same story. I'm not going to plot the flag back out here to give you a target, but we had a bear flag out here and we are going down. That's what the futures are saying. The futures market are already open. NASDAQ futures are down 1.58%. So that's the direction which we are going. Dollar is kind of ambivalent at this point of time. The markets have not decided what to do with it. But if the dollar falls and goes all the way down to 103.272, it has got a lot of support here. And if it falls further, or if it bounces back, then you have the potential of a head and shoulder formation, which would not be good for the dollar. Then we go on to the 10-year bonds, and 10-year bond yields are starting to go down, which shows that the market's probably expecting rate cuts to prop up the market. In the past, I have done the video which spoke about what happened in 1970s when we had stagflation. During stagflation, the initial attempt was to have easy money policy and focus more on employment protection rather than controlling inflation. That did not work. They tried it for a long time, and then Volcker came in and put heavy interest rates. It went all the way up to 20%, and then the inflation came down. So I'm thinking that reducing rates is not the right way to go. Increasing the interest rates and taking the pain one shot and then moving forward is the right way to go. But because I'm seeing that the yields are going down, I'm thinking that the markets are expecting that the focus of the Fed will be more on protecting employment, and therefore rate cuts will be in order. We'll see what Fed Chief Powell says, because he's going to speak too, and we're going to see the jobs data, and that will determine what happens next. Now let's go on directly to AI and NVIDIA. Boy, oh boy, look at this. We have a whole lot of support out here, and pre-market we are already at 105. We are opening way below that, so there is a lot of negativity out here, and 109 to 107 was the area which I thought will hold us back and give us some support. That did not happen. So I'm going to mark this red, and I'm going to take this and mark it red. And we had this area, this small zone of green, which I'm going to mark red as well. So that's where we are, and we have fallen down, and our next support for NVIDIA is going to be 101.96. Can you believe it? Getting NVIDIA so cheap, 105. Time to probably nibble. That's what I'm going to do today. Buy a little bit of NVIDIA, bring down my dollar cost average. I already have plenty of NVIDIA, so that's what I'm planning to do. Let's look at Meta. Meta was having some kind of a support from 200-day exponential before it broke down yesterday. Hot Dog says the only mags I like are NVIDIA and Google, but I'll get NVIDIA under 100. Yeah, I'm thinking the same, Hot Dog. I think we are looking at the same outlook for the market. So if you look at the price right now, it's at 563 for Meta. It's down 2.35%. And it's still above this diagonal line of support that we have from the past. But I'm thinking that today the support for NVIDIA is 557.59, failing which the support is going to be 549.65. It's on the way down. The MACD is ready to turn over to the bearish side, and also the momentum is dropping rapidly. So there is a little bit of panic in the markets. And as Warren Buffett says, when everybody is afraid, you have to be bold. Maybe the time for being bold has come in, and we have broken below this diagonal line of support for Google. We are right now at 154.33, down 1.11% in pre-market trading. And I think we have a lot of way to go down, because if you look at this gap fill that we had here before, the gap fill goes all the way down to 152.06. So we have, I'm going to put a support out here at 152, and I'm going to put a support here at the beginning of the gap fill and see if it has already become a resistance. No, there is still a support out here, and this could become a resistance. And this could become a support. This was a at 154.92, and this can be a support for us, my friends, and we could potentially have a little bit of a bounce here and hit this diagonal line of resistance and come back again. So we'll test this support. If we break down below this support, then our next support is going to be this one out here, which is 152.37. I can't believe what I'm seeing here. This is amazing, getting Google so inexpensive. So the PE is going to be even more cheaper than 19.41. Can you believe that? Now let's go on to Amazon. Amazon is another company which I'm really rooting for, and as it becomes less and less expensive, I will have to buy it. I think I forgot to put Amazon out here. I'll add that tomorrow. Amazon has got so many things going for itself. When the economy becomes recessionary, Amazon can shift into a whole lot of product mix, which is just staples, and it can weather the storm. It's got its fingers in the cloud pie. It's got AI, and it's also making its own quantum chips. So I'm thinking that Amazon is really a very strong contender for our dollars, investment dollars, as the price starts going down. And today I'm looking at Amazon having fallen significantly. In the pre-market session, it has fallen below 191.79. It's also fallen below our support at 191.24, which is a very long-term support that is coming in from a very long time. So if I was to go up and look at it, I think I would say it's been with us from 26th of October 2021. So it's a very strong support. It has not been touched upon many times. So breaking that and coming down is, I think, a very big statement out here. So I'm going to mark this diagonal line of support out here from a previous bear channel to be something that we have to look out for to provide us support in future. And even that is a long way away. So today in pre-market, we are down 2.17%. We are at 188.53. So this is amazing, my friends. I would do a little bit of dollar cost averaging today with Amazon as well. And when I say dollar cost averaging, I'm working on the Canadian receipt side, CDR side, and it's very inexpensive out there. So I'm going to buy more of Amazon. And then let's look at Apple. Apple in the pre-market trade has not dropped much as compared to the others. I'm a bit bearish on Apple because I think it's still a one-trick pony. They don't have anything in the AI that I can see. They are down 0.49%. They are quoting at 216.83 in the pre-market session. And the next support for Apple today is going to be 215.41. And the next resistance for Apple is a minor resistance at 218.44. I'm going to mark that red, and that's where we are. Next, let's go on to Microsoft. Just going to pull this up a little bit, make it a little big, and recalibrate the chart. Microsoft has got a support. I'll pull this out here. This is the resistance line of a previous bear channel, which I'm converting into a support. We have support at around 372.60 for today. And in the pre-market, we are already on top of the support. If we break down from there, let me go back and see in the past where we have supports. I'm just going to draw a few supports to see if they are still valid. And let me go here. And this is another place. Okay, so I plotted two supports from the past, and I just want to go and see if they are still valid. Yes, they are absolutely valid. The next support for us today is going to be 367.79. And the one after that is 346.01. I'll do a little bit of homework out here, and I'll come back to you and let you know what it's going to be if we have more supports out here. I'm looking at the comment section. Hot Dog is saying the only mags I like are NVIDIA and Google. I'll try to get NVIDIA under 100. Yep, I agree. And Hot Dog is saying I sold all my Amazon for 240 in January. I don't know if I want to get back in right now. I can understand your position. For me, Amazon is like $21 or $22 in the Canadian CDR side. I'm just going to show you this CDR list so that you can see what I'm looking at. Let us see where Amazon is. Amazon. Let me just sort this by symbol so that we can see Amazon on the very top. Yeah. So this is Amazon on the Canadian receipt side. We don't have pre-market sessions out there. It's always a bit behind what happens in NASDAQ. But you can see I can get Amazon for 22.79 Canadian dollars. So I just dollar cost average and I can go in. I don't have to be too much afraid. But when you're looking at $240, $210, things like that, it looks very expensive and you can't buy much. So we are fortunate out here that we have the CDRs, which can enable us to buy Amazon a little bit inexpensive. $192 is not something I would nibble at. It's still a lot of money. And we have this diagonal line of support, which was coming from a long time for us. I would say that one of the touch point was on 5th of August, 2024. And if we go down further, the other touch point was on 26th of October, 2021. And it has not been breached a lot. It has been pierced once or twice, that's all. So it's a very strong line of support, and we have broken down below that. Right now we are at 188.55. It's down 2.15%. So I think the next support is going to be 184.24. And after that, we have a support at 180.17. And then we have a support of 178.36. So friends, it looks exciting to me on the Canadian side. That's where I'm investing. And of course, Apple, we have already seen. Microsoft, we were looking at Microsoft out here, and Microsoft has got support in this diagonal line of support, which is coming from a previous bear channel. It's breached that. It has gone down. It's down 1.65%. It's at 372.52. This line of support has now become a line of resistance, and we have the next support at 367.79. That's going to be our support today, and our resistance today is going to be 374.42. Momentum is deteriorating. MACD is also going down. Overall sentiment is negative. So you'll see that it's in a really bad shape out there. Then we have Tesla, which is down 5.56%. You can see Tesla has the highest PE. I don't know what is worth this, 129.83. I'm going to do a little bit of a mini rant to get it off my chest. Google with Waymo has been in 5 cities. It has made millions of dollars in ride revenues by actually taking passengers totally without any kind of human intervention. And it uses LiDAR and video cameras and other things and a pre-planned map, etc. But whatever it is, it's already started making money. Tesla is yet to show any robotaxi, and its FSD, full self-drive, is more of a branding than what it actually is, because it's not full self-driving yet. So even with the cars it has already got in the market, that's an issue to look at, whereas the Chinese have already introduced free. Nobody has to pay for BYD self-driving, whereas with Tesla, which is not even full self-driving, they have to pay a lot of money, I think $8,000. It's a lot of money, and Elon Musk is attracting a lot of negative press, and the board of directors of Tesla are not doing their job. They're not putting a little bit of control on Elon. So things are not looking that great for Tesla, and Tesla can't retain this kind of high PE. That's my personal opinion, of course. Please don't have your hate on me. I'm looking at it from a financial perspective. It's been traditional knowledge that anyone who is in business should not get into politics. They have to stay away from politics, stay neutral from power centers, just focus on their business and cater to the public. That's the job of the CEO. But the CEO is different, and we are seeing that we have broken through a whole lot of supports within the heavy area of support. This entire thing is green. Tesla is not supposed to be able to break down from here, but it has come down. Today it's at 248.56, which is minus 5.70%. So it has converted a lot of greens into red. I'm just going to mark it red to show you how red Tesla is becoming within this green zone. Just bear with me for a minute so that I can give you a dramatic effect of how bad things are for Tesla, that within a buying zone, if you're going to drop so heavily from 262.77 to 248.91, breaking a lot of explicit supports within this green zone, I think that you're in for big trouble. So we have got this also becoming red, and the last one I converted red was at 241.88. We are at 248.75. So I should not convert this into red. Let it remain green for right now. So that's going to be the support. 241.55 is the support for today. The first resistance is at 250.72 and the next resistance is at 255.61. And friends, I'm not even talking about the exponential moving averages. They're all way above. We don't even have to worry about them. This is just simple support and resistance lines. Not looking good. Oracle is down 2.23%. It's fallen below this horizontal line of support in the previous trading session. And right now it's fallen significantly. And I think the next support is going to be out here. Just let me color this green. And this support is going to be at 128.01. And do we have any other support lines? Yes, I could see a few support lines. Out here. Yeah, I got a support out here. Just going to pull this down a little bit. This is a support, and this is going to be the support for today, and it's at 135.88. So that's our support. And then what do we have here? AMD. AMD was supposed to form the reverse head and shoulder. It's almost at the threshold of falling out of it. So I'm going to remove this reverse head and shoulder out here because it's no longer relevant. The potential is already gone. And we are down here. Our next support is going to be 96.34. And our MACD is deteriorating. Momentum is also dropping. So for AMD pre-market, it's at 99.83, down 3.28. SMCI is down 6.30%, and it's going to drop down further. I'm not going to even bother put a support out there. AVGO is down 3.23%, and it's at 163.66, which is somewhere out here. And I think it could get a little bit of a support at 159.47. And after that, I think I'll try to plot more support lines when we have the live stream tomorrow. Palantir is down 7.11. Again, Palantir has a huge PE, so it's got to give up some of those gains. But with the geopolitical situation the way it is and its applications in defense, government being its main customer, I think it will come down a little bit slower. It will maintain a higher PE for longer, but it has definitely broken through this support at 83.96. So I'm converting this support into a resistance, and yeah, the next support is 73.09 for Palantir. Then we go on to SMH, which is the semiconductor ETF. I think our next support is going to be at 200.91. So we are going to look at SMH falling further today. And then we have, what else do we have here? FNGD. My FNGD is going up. I'm trying to sell FNGB. I have 100 of it. It's at a loss. I want to just cut the loss and go. My pre-market orders are not executing. Something is wrong with my trading platform. I'll have to call them up after the live stream is over because the price is dropping sharply out there. But I'm happy with FNGD, which has gone up to 19.11. It's up 5.76. As you know, I have plenty of FNGD, which I was holding at a loss for a long time. It's all profitable now, my friends, and I'm going to be selling them 100 at a time on the way up, and I'm going to start buying FNGB on the way down. So that's the way I'm looking at it. Of course, there are a few other shares out there like Rigetti, which I'm following. It's down 7.48, fallen below the line of support. It's going to be really bad for it. SMR is also falling significantly, not looking good at all, my friends. But that's the way life is. I'll make profits elsewhere. I'm going to hold on to Rigetti, SMR, and AV, and I'll get profits from them later on. It's a small portion of my portfolio, not too much worried about. So that's what we have out here. And we have around a few people out there on the live stream, along with Joe Williams, Hot Dog. So if there's any ticker request that you want me to look at, any specific stock that you're tracking on the way down for dollar cost averaging, I could give you my opinion on what the technicals for them says. So you can just put it in the chat window out here. If not, you could even share your ideas so that I can consider them for my own trades. Of course, it will not be considered financial advice, so I won't hold you liable. I would just like to have more stocks to look at. I have a very narrow focus deliberately, but if there is something which is a surefire hit that you're looking at, please share it with me and I'll give you credits on the on the live stream and on my videos if I make some money out there. So I'm going to wait for a few minutes for your response, and after that I would end the live stream. Tem still. Okay, let's go and have a look at Tempus AI. TEM. CELH. Okay, I'm going to add CELH here, and we'll do an analysis of both of them and see what I think about them. Okay, let's go to TEM. Unlike our other charts, this is totally greenfield. We have no support and resistance lines. So we're going to start afresh. So the first thing I'd like to do is I would like to draw a trend line for a bull channel. So a bull channel is visible. So this is really good. We have at least some supports to go with. The next thing I would like to do is would like to draw other supports that I can see, horizontal line of supports. So the first one I'm going to put out here is likely going to be a resistance. So this is a resistance. I'm just going to make it a little thicker so that we can see. These are rough lines of resistance out here. And then I'm going to draw a line of support out here because we had a gap up, gap down. And I'm going to mark this green. And then I'm going to put another line of support out here, which is the gap down that we had. So this is green. So I would say that today we are on the support before the market opens in the pre-market session. Our support today was going to be 45.93. So we are already broken down below this. So this diagonal line of resistance is the first resistance we are going to face today. The support that we are going to face today is at 42.80. And then the next support for us is going to be 35.74. And what else do we have here? Yeah. So if one was dollar cost averaging on Tempus AI, I would say that you wait for the breakdown below this diagonal line of support and then do a little bit of dollar cost averaging and then go down. The price is not that expensive like Amazon, so it would be a little better, but I don't have this on the Canadian side, so I'll have to do it on the US dollar side. I'll consider this. And I don't know if it makes profits. I'm going to have a look at Tempus AI and check out if they have any profits. Let us go to CELH, Celsius Holdings Limited. Wow, this chart looks really good. This is really a strong stock. I'll have to check out what they do, what is their business. So the first order of business is to draw a trend line which shows that it's in a bull channel. It's looking good. It's got support from the 50-day, 20-day, and the 9-day exponential moving average, and also the 100-day. But it's below the 200-day exponential moving average. Okay. Then we have the 100-day, which is crossing over the 9-day, and oh, we have a golden cross out here. Not too bad. And we have support from the 9-day exponential still, and pre-market it's up 1.10%. This is amazing. This is amazing. This looks good. Celsius Holding. Maybe it's something like Berkshire. I'll check this out. Hot dog, thanks for this clue. I'm going to potentially invest in this stock because right now the chart looks very strong to me. And if you were to look at reverse head and shoulders, right? So I would say that we have a reverse head and shoulders, and just for the sake of fun, let us plot how far it would go. So if I'm assuming this to be shoulder, let us say I assume this to be the shoulder. I'm taking this off and doing this. So assuming this to be the shoulder, if I clone this one, change the color just so that we can see it clearly, pull it out. Okay, so I'm looking at a target of 35.83. I think it's already met its potential from the reverse head and shoulders point. It's a drinks company. Okay, great. Thanks, Joe. So it's already met its reverse head and shoulder target. So it would be in order for us to put a resistance out here saying this is our resistance for today, and this diagonal line of support is our support for today. The 9-day exponential is our first line of support. The 20-day is the next line of support. and the 100 days, the line of support after that, and then the diagonal line of support. A very strong chart, but definitely the overall market is impacting it. And if it's a drinks company, and if it goes, it's not a specialty drink or something like that, then it could be part of staples and it could perform well in the recession. So I'm going to check out these two. Thanks a lot, Inf and Hot Dog, and all the people who have tuned in. And I hope Inf has a great trip, his holiday. And I'll catch up with you guys again later. Have a great day. Enjoy the ride down. Do good dollar cost averaging. This is the time when strong portfolios for the futures are built. And the way I'm looking at it, my strategy is to sell my shorts and get profits in a installment, so that I can dollar cost average my profits and get as much profits as I can, taking care of the downside. And I'm going to start buying FNGB, which is the longs for Mag5, and I'm going to start buying them when we reach the bottom. I'll buy in hundreds at a time and accumulate that. So that's the approach that I'm taking. So I'll catch up with you and keep you appraised of what's happening. And it's been a blast doing this channel. We are getting a small community together out here. It's going to be fun. Take care. See you later. Bye for now.